Hi everyone, I am Bobby Casey, founder of Business Anywhere. And a little bit of backstory about Business Anywhere, how we got started. I've been doing international tax and company structure, residency and asset protection consulting for close to 25 years now. And over the years, we found some issues and we found some things going on that we didn't like in this space. And over those years, we had to register a lot of companies for clients. And there was just so many things that we didn't like, and we didn't like the tedious process that we on our end from the administrative side and also our clients had to go through on their end to get that business started and maintain ongoing compliance. So we created Business Anywhere as a way to make it super simple for people to get their business registered and to handle their annual ongoing compliance in a completely automated way. It's basically, we're just passionate about entrepreneurship and getting as many people as we can out there to start new businesses, because we truly believe that entrepreneurs really, make the world go round. And so Business Anywhere is really just an all-in-one platform to help clients get those business started as simply and easily and with a low cost as possible, and to completely automate their annual compliance so they don't have any ongoing issues. So in this webinar today, we're really going to be discussing things like how to avoid costly mistakes when you are setting your business up. So we're going to go over things like where to register your business, which entity type you should be using, tax implications of various entity types, mistakes people make along the way and how to avoid them, compliance issues, and so on. So in this process, you're going to see a lot of different things, but we're going to keep this as short and sweet as possible, and you'll have a way to contact us at the end. So let's get started. Avoid these costly mistakes. How to set up your business successfully. So as I mentioned, we're going to be discussing truly how to properly get your business started and off the ground without making these major mistakes. Choosing your business structure itself, the legal entity that you operate within, does make a huge difference. Sometimes people think, I'll just start as a sole proprietorship and figure it out later. Well, the reality is a lot of people do that, but it's not a great idea. Now, of course, there are some situations where operating as a sole proprietor might make sense. For example, if you just got a really small side hustle, or you're a teenage kid or a young person who is just running this side hustle, or maybe you're just kind of testing the waters in your business, trying to figure out if it's something that's going to work or not, maybe it makes sense to run as a sole proprietorship. But generally, you don't want to do that because you have unlimited liability associated with the business you're operating. Anything that happens within the context of your business, you sell a product or provide a service that damages or hurts someone, you have personal liability, and they'll be able to come after your home, your cars, your real estate, your investments, your other business, your income, that sort of thing. So you really don't want that in any scenario. So let's just consider sole proprietorships are really just for really small side hustles and testing the water. The other issue with sole proprietorships, it really just doesn't look that professional. You're sending invoices with your name on it, sending them, to pay your bank account directly, and you lose a lot of credibility that way. At a minimum, you really need to your corporation. Now, there are a couple of other entity types that we're not going to be discussing in this presentation because for the vast majority of people, they aren't really relevant. But there are things like general partnerships, limited partnerships, and business trust that you can set up. But again, they're not relevant for 99% of people. And we're trying to keep this as simple as possible for people who are just starting out, getting their business up and running. The second entity type we're going to be discussing is LLCs. LLC stands for a limited liability company. An LLC is essentially a hybrid business type that is a hybrid between a corporation and a partnership. The first LLC was created back in the late 70s in Wyoming, and now every state in the country has LLC statutes in place. So that brings up a great point. Also, there is, for those of you that are not from the U.S. and maybe don't fully understand this, there is no such thing as a U.S. LLC or a U.S. corporation. Entities, legal entity structures are created at the state level, not the federal level. So you have a Florida LLC or a Wyoming corporation or a Delaware LLC or a Texas corporation. They are not created at the federal level, which means every state has their own rules and regulations on how they operate, which means, and we'll discuss this a bit later, there can be advantages and disadvantages to being registered in one state over the other. So an LLC does offer limited liability protection. So what that means is within the context of your business, if something happens, you sell a product or a service that injures or hurts someone or damages something, your liability is limited to your investment in that entity. Meaning something happens in the business, they can't come after you personally to sue you for any wrongdoing. They can't come after your house, your cars, your other businesses, your properties, that sort of thing. So an LLC is highly attractive in that regard for the liability protection itself. LLCs do offer an enormous amount of flexibility on how they're managed. You can choose to be member managed, manager managed. You can choose if the members managed by a majority vote or unanimous vote. You can have one manager, two managers. You can choose how much members get paid. And for clarity, members are the owners in an LLC, or also known as partners. In a corporation, they would be called shareholders, but in an LLC, they're called members. And managers may or may not have an ownership or membership role, but they do have the management control over the entity, especially in a manager-managed LLC. So you have a lot of flexibility on how they're managed, on how much you pay out to members. For example, you might have an LLC with two members, it's 50-50, but for other reasons, you might have one member gets paid 70% of profits, the other gets 30%. That's easily done within the operating agreement of an LLC to determine how much each member gets paid. There are some tax advantages to operating as an LLC. It's a pass-through entity. The default tax selection of an LLC, it's called a disregarded entity for tax purposes, meaning if the LLC makes $100,000, it passes through to you as the member, and you reflect that on your personal tax return on your Schedule C. So you don't have any double taxation like you could have with a corporation, and you don't have any complications. It's pretty super simple to deal with. If you're a non-U.S. person, that could be ideal, because then the entity or the LLC earns the profit and you personally have a tax obligation based on it. And based on the nature of your business, you may or may not even have a tax obligation in the U.S. for that income. For example, if you don't have what's called ECI, or effectively connected income to a U.S. trade or business, or nexus, a physical connection to the jurisdiction where you operate, then you generally won't, as a non-U.S. person, you won't have a tax obligation in the U.S., which could make it ideal for a non-U.S. person to establish a U.S. LLC, because then they don't have to deal with the complexities of the U.S. tax code, and the taxation is based on their personal residency, where they live, or if they're not a tax resident anywhere, then they don't have an issue there. So moving forward, corporations have shareholders, which own individual shares. So you determine in your bylaws how many shares that company has at the beginning. For example, you might determine that the corporation has 10,000 shares, and let's say each share has a par value of $1. That means the company has a par value of $10,000, and you issued those shares out to the shareholders. So it's treated a little bit different than LLCs. And then you have a board of directors, and then you have executive management of a corporation. Corporations also offer inside creditor liability protection, meaning if the entity, the corporation, had a liability claim against it for selling a faulty product or service, you as the shareholder would not have any liability associated with the activity of that business. However, corporations are more complex from a regulatory standpoint. You do have to maintain a lot more complexity within the company documentation. There's more compliance involved. For example, you need to hold annual meetings and maintain shareholder minutes, and any major changes have to be documented within the shareholder minutes, and you have to make votes. Now, of course, maybe you only have one shareholder, so the voting in the minutes is easy, but you do need to continue to maintain those. They do have a more complex tax structure. A corporation is considered its own legal person, meaning it has to pay its own tax. And at the corporate level, you would have to pay at the federal level and potentially at the state level, depending on where the corporation is registered. You would have to pay corporate tax and potentially state level corporate tax as well, which that's where double taxation comes into play, because if you're the owner of that company, maybe you take a salary from the company, which would reduce your taxable income, but from your net income is where you would pay yourself out a dividend. And so that dividends are paid after you pay corporate tax. Then you would personally receive a dividend, and personally you would then have to pay tax on the dividend as well. So there is a thing called double taxation in that scenario where LLCs don't have that. One other note I'll hit on just a little bit more in depth in a later slide is LLCs do have a lot more flexibility from a tax standpoint, in that they can elect to be taxed as a C corporation, like I just mentioned, where the entity is its own legal person and files and pays its own tax return. There could be some advantages to that. They also have the option, just like corporations, to file a tax election to be taxed as an S corp. An S corp is more for small businesses. The advantage to filing as an S corp is it allows you to reduce your what I call social tax, which is approximately 15% on your salaried income. So if you choose to pay yourself, or you choose to elect to be a C corp, S corp as an LLC or a corporation, then you would only have to pay that social tax on the amount of your salary and not the total amount of your net income. So you do have some flexibility with an LLC to choose the tax status you want, whereas a corporation, you can only be the C corp or S corp. You don't have the ability for it to be a complete pass-through. So moving on. Factors to consider when you are registering your entity. Number one, liability exposure. Number two, tax implications. Three, administrative needs. And four, your growth goals. So liability exposure, you have to consider what your end game is with the company. So as I mentioned before, a sole proprietorship has unlimited liability with the activity of the business. You have zero liability protection. If the business does something bad, you are going to be held personally liable. In an LLC, if the business does something bad, you are not going to be held personally liable, unless, of course, you are personally negligent for some reason as an individual. And then same thing in a corporation, within the activity of the business, you as the shareholder are not going to be held personally liable. Now, from a liability standpoint, that covers internal liability events. However, there can be external liabilities that are related to what you personally do, and that's what I call outside creditor liabilities. This would be a situation, for example, let's say you have a party at your house, you invite your friends over, one of your friends drinks too much beer, gets drunk, drives home from your house, and injures or kills somebody on the way home. Well, the family of the injured party is going to sue the driver, of course, and they're going to sue you because you overserved that person in your home, gave them too much alcohol. That is what I call an outside creditor liability issue, meaning that family or that claimant that is suing you personally for that personal liability is going to be able to come after your personal assets to satisfy the claim if they are granted a judgment. In order to go after your assets, they have to find them and identify what you have. If they identify that you have a sole proprietorship, they can take everything in your business, your bank accounts, your entire business, your inventory, everything. If you have a corporation, they can actually take the shares of the corporation, or the court on their behalf can take the shares of the corporation and give them to your creditor to satisfy that judgment. In the case of an LLC, if that LLC is properly structured to protect you or protect you from that, then they are limited to what's called a charging order, and they're not going to be able to come in and take your business assets. So I'm not going to get into an in-depth conversation about charging orders, but you get quite a bit more liability protection from outside creditors with an LLC, much greater than you do with a corporation. So an example of this, it could be that you use an LLC if you have a corporation, for example, and you personally have those shares. You might want to think about creating an LLC for your holding company to own the shares of your C corporation, because then you don't own those shares of the C corporation. You own an LLC, and that LLC is going to protect you from outside creditor liabilities. Depending on the nature of your business, you've got to consider what type of business entity makes sense for you. For example, if you are in a real estate business, you definitely want to own those properties in an LLC. Based on the point number 4, based on growth goals, if you are taking on investors like from seed round or angel investors or VCs, you are probably going to want to be a C corporation, because those investors are going to want to pay back at some point, or they're going to want to take the company public. And generally, your investors are going to want you to have a C corp. So that would be a serious consideration on who the investors or partners are in the business to determine what entity structure you're going to use for this business. Tax implications. We discussed a bit on the different tax statuses. A sole proprietorship, you're taxed individually. An LLC, by default, you're going to be taxed individually as a pass-through. If it's a single-member LLC, it's a disregarded entity. Everything flows through to you. If it's a multi-member LLC, it's treated as a partnership. Either way, it still flows through to you, but you do have to file a partnership tax return and issue a K-1. If it's a corporation, a C corporation, it does not flow through to you. You would take a salary and then potentially issue yourself dividends. If it's an S corp, again, you would take that salary and then you would issue a profit distribution, and it's taxed a little bit differently. So there's a lot of different considerations there for you to think about when you're deciding which entity type you're going to do. Administrative needs. Obviously, a sole proprietorship has basically no administrative needs, but also you don't get any of the benefits of being in a properly structured business. An LLC has much lower administrative needs with a lot more flexibility, but you do still have to file an annual report with Secretary of State. You have to file your normal tax returns depending on what you're doing. A corporation has a much higher level of administrative needs with the corporate tax returns, your payroll returns, because you're going to have to set your employees up on payroll. You're going to have to do payroll tax returns. You're going to have to most likely do quarterly income tax returns and these sorts of things. And then you do have the additional administrative needs of a corporation, like I mentioned earlier, with maintaining your corporate minutes and your, taking votes and that sort of thing. On this slide, we are going to walk through some of the biggest mistakes people make when registering their entity. So I hope you pay attention here, because as someone who's been in this business for more than 2 decades, I can tell you the number one biggest mistake people make when they're starting their new business, by far, the number one biggest mistake people make when starting their business is registering their business themselves. Do-it-yourself business registration in almost every case is a big mistake. Now, of course, you might be thinking, hey, this guy's biased. He owns a company that does business registration. And you'd be right. I am biased. However, this is one of the reasons I started this company, is because I saw how many people make major mistakes on doing this, which later tend to create problems down the line. Liability issues down the line, tax issues down the line, compliance issues down the line, privacy issues down the line. So many things can happen when you're registering that business. If you don't know what you're doing, you can make so many mistakes. For example, you can choose the wrong entity type. For example, you might think, I don't really need to waste my money on an LLC. I'll just do a sole proprietorship. and now your business does really well and you're selling these products online and everything's great. But then you have a lawsuit against you and you get sued for $1 million and you realize, oh my gosh, I'm a sole proprietor. You get personally sued. People can now come in and take your house, your cars, these types of things. Or maybe you chose the wrong entity type. Maybe you are a U.S. person living abroad and you think, I'm going to have a corporation because that's what my accountant told me to. Or I'm going to have an S-Corp, which is what my accountant told me to do. That's a terrible mistake. There are so much better solution, or there is such a better solution than a corporation or an S-Corp if you are a U.S. person living abroad. That would make you significantly more tax optimized, saving you tens of thousands of dollars per year in your tax filings. You literally can make that mistake so easily because you just think, I'll just do it myself. The filing itself, when you're filing the paperwork with the state, you might not understand the right way to file. You might not even know, you wouldn't understand the right questions to ask because you haven't done it thousands of times. For example, I can give you a great example here. I had a client a few years ago who did exactly that. He wanted to start a company selling supplements. And he's in Florida. He decided to go to the Florida State website and register an LLC with the state of Florida. He said, I don't want to spend these few $100 hiring a professional to do this. I'm going to save the money and do it myself. He registered the entity himself. And one of the requirements on there, which we're going to discuss on a later slide, is you have to have a registered agent in the state. He did not have a commercial registered agent, so he named himself as registered agent. On the filing document, it has his name as registered agent. It has his home address as registered agent because you have to provide a legal address for the business in the state where the company is registered. Fast forward a couple of years, he ends up getting a big lawsuit for a couple $1 million against his company. The lawyer representing the claimants found his company online on the state's website, found his name, and found his home address on there. They amended the website and added him personally to the lawsuit, and now they had the sheriff and process servers knocking on his door at home, harassing his family at home, to serve him lawsuits where he was personally named and his business was named. They personally named him because they found his name and home address. This was a simple mistake that could have been alleviated by hiring a commercial registered agent and paying a couple, $100 to $200 a year to have a commercial registered agent in this case. And this situation cost him, low seven figures is what he ended up having to pay out. He lost an enormous amount of money from this situation. Picking the wrong state for your entity. So depending on what type of business you're doing and where you live and where your customers are and these types of things, the nature of the business, choosing the wrong state can make a big difference. Let's say, for example, you have a cleaning business. You're cleaning homes and maybe commercial buildings, and you're based in, let's say, South Carolina. Well, in that case, you're going to have employees, and you're going to be doing the actual work within the state, physically within the state of South Carolina. It makes the most sense in this scenario to have an LLC registered in the state of South Carolina. However, you might have a different business. Let's say you have a software company with no employees. Let's say you're living in Kentucky and you have a software business that's a digital download, no physical products. You have no employees in the United States, and maybe you have a team of developers in Serbia and a team of customer service reps in the Philippines, for example. Well, you don't have any direct connection to the state where you live. And there's really no reason for it to be registered in Kentucky in this case. You could, in that case, register the company, let's say in the state of Delaware, if you're bringing on investors, because investors look favorably upon the state of Delaware. Or maybe you're looking for more privacy. You might register the entity in Wyoming, for example. So it might benefit you tremendously to not necessarily be in your home state. Another example here is if you're a non-U.S. person. Let's say you are a German with a coaching business and you're living in Mexico. Well, where would you register that LLC? You don't even live in the United States. Why would you even register that LLC in the U.S. at all? Well, number one, tax advantages, because in this scenario, the German doesn't live in the U.S. He's a non-U.S. person for tax purposes, and the business itself wouldn't have nexus, or the physical connection to the jurisdiction, or ECI, which is effectively connected income to a U.S. trade or business. He would not have that nexus or ECI in the U.S., meaning in this scenario, he would pay no U.S. income tax, and he would still be able to use the U.S. entity, U.S. banking, and other merchant processing tools and all the software tools that work really well with U.S. entities. And it's a super cheap option for him, and is an infinitely better solution than registering a German company where he would have to pay company tax. So there could be a very serious benefit or very serious consequence for registering in the wrong state. One more example is if you're a real estate investor. You, in most cases, with my consulting practice, in most cases, I recommend clients own their properties almost exclusively in a Wyoming LLC. Why? Much better privacy, because there's no need to disclose members or managers' names to the Secretary of State. They have very good statutes protecting the assets of both single and multi-member LLCs, and the ability for a creditor to come after you is limited to a charging order in the state of Wyoming. So that's very good if you're owning significant assets like a large piece of real estate. You may go to your local accountant or your local business lawyer in your home state. Let's say you live in Tennessee, and they might tell you, well, you need to own those properties in a Tennessee LLC because the property's in Tennessee. That is not true. That's because that Wyoming LLC owning the property in Tennessee is not conducting business in Tennessee. It only owns an asset in Tennessee. There is a significant difference there. Now, if you own 20 properties in the state of Tennessee, you might still want to own your properties in a Wyoming LLC, but if you're managing your properties yourself, then you would want to establish a Tennessee entity, like a Tennessee LLC or a corporation, to be the property management company, because that property management company will have nexus and ECI because you're doing physical work in the state and you have employees. So having the wrong state for your entity can have liability consequences, privacy consequences, even tax consequences. And then the last big mistake I see is skipping compliance issues. And that is not filing your annual report on time with the state, not filing your tax filings on time, not maintaining your records, and that sort of thing. And people just make these mistakes out of laziness. This is also, as I mentioned earlier, one of the reasons we created Business Anywhere, because we automate all of your state compliance. So you literally don't have to touch anything. The only thing you have to do with us is not cancel your company when it's up for renewal. And as long as you don't cancel it, it automatically renews. Our software automatically files your annual report. It completes the filing. It pays your state fees. It pays your compliance fee and renews your registered agent service in the state. You don't have to touch anything. Now, obviously, if you don't need the LLC anymore, you can log into your dashboard, click one yellow button that says cancel, and you're done. Super easy. Next slide, we're going to be discussing what is a registered agent, or demystifying registered agents. So this gets a lot of talk online because a lot of people don't fully understand what a registered agent is. Do you need one? Is it a legal requirement? These types of things. So let me tell you first of all what a registered agent is. It is a legal requirement in every state to have a registered agent with a registered address in that state where your entity is registered. You cannot register an LLC or a corporation in any state without a registered agent and a registered address in that state. However, the next question always comes up. Can I be my own registered agent? So the short answer to that is yes. Yes, you can. If you have a home or a business address, physical address in the state where your entity is registered, yes, you can be your own registered agent. However, that is generally a terrible idea. So reverting back a couple of slides where I discussed my consulting client, who had a supplement business. He was his own registered agent. By doing that, he exposed his name and his home address in public record, which made it super easy for that law firm to find him and come after him, not only his business, but also personally, and then harassing him at home. Of course, you can go a bit more nefarious there, because if you are your own registered agent, your personal information, your name and home address, is in public record for anybody to find. So somebody with more nefarious intent, they could find your home address by doing a record search of your name and finding an LLC attached to that. I'm a big privacy advocate. You can even see on our website, we do have an entire page dedicated to privacy by default. You can read more about it on there, but we are huge believers in privacy, and we do believe it is generally a terrible idea to be your own registered agent. It just exposes you to too much liability. For what purpose? To save $100 or $200 a year. Most registered agents charge between $100 and $200 a year. What does a registered agent do? What are their roles? A registered agent's role is to be, during working hours, during the work week, Monday through Friday, 8 to 5 a.m., they must have a person on staff enabled to receive mail on behalf of your business. Mail, official mail, like something from the Secretary of State's office, the state tax office, the IRS, or what we call SOP mail, or service of process mail. That's mail that has to be signed for. The role of the registered agent is to have somebody during working hours to receive these items on your behalf so that you get your legal notices. So there have been many cases where people use their home address as their registered agent address, but no one's home during the day. So you try to get these notices delivered. When they don't get delivered, they get returned to sender. When they get returned to sender back to these agencies, or in the case of service of process mail, what happens is there's a notice that gets sent to the state where your LLC or corporation is registered, saying that is not a legal registered agent address. And then you're going to get a letter saying you can no longer use that address as your registered agent address. So there are some significant advantages to using a commercial registered agent, both from a privacy standpoint, also making sure you get your compliance notices, legal notices in a timely fashion. But mainly, it's just a huge risk to expose your personal information in public record, for what? The benefit of saving $100 or $200 a year. It just makes no sense. Must-haves for a new business registration. So at this point, we have discussed what is the right entity type for you, which is the right state to register your entity, the tax implications of various entities. Should you or should you not have a registered agent in place for your business entity? Once you've got that entity registered, you've done all those things we discussed on the previous slide, your next steps here are to apply for your EIN. EIN stands for your Employer Identification Number. That is your tax ID number for your business. That is what you will have to have in order to open bank accounts or other financial accounts and to file any tax filings. It is a legal requirement for you to have that, so you must have that. Get that done right away. Next thing you need is an operating agreement. It is not technically a legal requirement. However, most banks will require you to have an operating agreement on file in order to open a bank account. So while it's not technically a legal requirement, it's going to be practically impossible for you to open a bank account without an operating agreement. Thus, you wouldn't be able to run your business without a bank account. So an operating agreement is the internal governance document that stipulates how your business is run, who's liable for what, who the members are, who the managers are, who has voting rights, what are the voting rights, who has managerial control, what rules they have to follow, what their requirements are, that type of thing. So it is a document effectively how you interact with your business, and it is critically important to the operation of your business. The next thing is you do need a mailing address for your business. Now, we put on here a virtual mailbox. While it is not technically a legal requirement, it is a highly recommended thing that you should have. So number one, if you're opening a bank account in the U.S., you will Firstly, you will absolutely need a legal address, which is your registered address for your business in the state. Next, you will need a mailbox address, and for privacy reasons, we highly recommend using a virtual mailbox. This is a service that we offer in many states, but we do highly encourage you to get a virtual mailbox for your business, because then you can receive mail in a private and secure way without exposing your mailing address anywhere in public record. And it makes it super easy for you to get your mail online. You can download your mail, you can read it online. For important documents or things like credit cards or packages, you can have it forwarded to you anywhere in the world. This is especially important for digital nomads or people who do a lot of traveling salespeople, that type of thing. But you do have to have a mailing address for your business in the U.S. because your bank will not correspond with you with a non-U.S. address. Lastly, on the address side, you will need a physical address for your business. Now, that is something for your banking purposes only, so it's not a matter of public record, but you will need to give them the physical address where you can verify you do your work. That could be just your home address, if you have an office address, and in many cases, it does not even need to be a U.S. address. The banks just need a physical address where you can show that you have some connection to, like with a utility bill or a personal bank statement or something like that. And lastly, you need to open a bank account, and I just mentioned the address requirements for that. But within the Business Anywhere platform, we do have several banking partners where you can open bank accounts online without having to even leave the dashboard. And all of those banking partners are available to both U.S. and non-U.S. persons to open the accounts online in really just a matter of minutes. But getting that bank account open obviously is going to be critically important for your business. Next, why choose Business Anywhere? Firstly, automated compliance. As I mentioned earlier in kind of our startup story, we started this business with the purpose of making company formation simple and easy and making ongoing compliance fully automated so you can get down to the business of what matters, and that's providing value to your customers. So we do fully automate all your state compliance, like filing your annual reports, paying your state fees, paying your compliance fees, and making sure you have your registered agent service up to date. That is a fully automated process. You do not need to fill in any forms and click buttons here and here to pay. Is nothing. You'll get a notice from us before the company is up for renewal. You'll see if you don't want to renew it, you just click the link, log in, click the yellow cancel button, you're done. If you don't need the LLC anymore, if you want it, you don't have to respond to the email, nothing. It automatically renews. And that is beautiful, especially for people who have multiple LLCs, like real estate investors. We have some clients that have dozens and dozens of LLCs, and it makes their life so much easier to not have to jump through those hoops, doing the annual report filings and paying all those fees and clicking here and here to pay all the fees. Fully automated. Fast formation. You can log into the system. I'll send you the link in just a minute. You can log into the system. It literally takes you 5 or 10 minutes to go through the formation process. We even have videos on each page if you have questions about what something means or how to do it. We literally walk you through step by step of the process. All you have to do is go to our business registration page, put in the name of the entity that you want to use, and click search, and then follow the step-by-step guide on there. It takes 5 or 10 minutes maximum to do that. And we are an all-in-one platform. So we do the U.S. company formation, the registered agent service in all 50 states. We have the virtual mailbox service available. And we also do remote online notary. If you need documents notarized personally or for your business, you can do it in a video chat. We also have many other of our software partners that you can utilize within the dashboard for things like opening bank accounts, bookkeeping and accounting, tax filings, filing a trademark, filing for your ITIN, a virtual phone system, merchant processing, and so on. We have lots of different integrated software partners that can make that happen for you without having to leave the dashboard. So it really is an all-in-one platform for getting your business started. So recap, basically we've covered all the basics of what you need to start your business, which entity type, where you should register, tax implications, liability risks, mistakes people make, registered agent service, We've covered everything about automating your compliance, common mistakes people make, everything. So I do appreciate you joining me through this webinar today. We do have a special offer for anyone who is in this webinar. You can get 10% off on your first order using the webinar code below, webinar 10. You can just scan that QR code. It'll take you straight to the business registration page. And if you have any questions, feel free to reach out to us through our website or at our support email, which is support@businessanywhere.io. Thanks, and have a great day.